Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Friday afternoon, we have Mark Marex, Director of Index Research and Development with Nasdaq Investment Intelligence, to discuss the two key factors for the turnaround that we saw in the Nasdaq-100 for the month of July. And Mark, it is refreshing to finally see some solid green to close out the month.
It is, isn't it, Jill? Just to point out, I mean, we're almost at the end of the month here, got 1 hour to go, but putting in a really solid day on the index today, up almost 2%. So you'll have to add that to what you're seeing year to date here on this first chart, where we were down about 22%. Going into today, already kind of a solid bounce back off the lows in June, right? We were down a little over 30% year to date in June at one point. That was, of course, towards the end of the 1Q earnings season. And with 2Q earnings getting underway, you've seen a bunch of these names really rally nicely. Everyone on this list of Fat Mang, which is the 7 largest constituents, has reported as of this week, except for NVIDIA. And you can see even before today, a lot of those names had a nice bounce upward. Apple before today was back to down only a little over 11% for the year to date. Microsoft had bounced up to about 18% down. Tesla and Google right around 21% down. And Amazon, which is up 12% today, basically is going to cut its year to date loss in half once we get to the close. So really strong price performance for the index overall, kind of throughout July, even getting into before this week. But the earnings this week for most of this bunch have really helped us out, and that's what the next slide is going to talk about.
Yeah, and I want to talk about that with the headlines that we're seeing coming out of earnings, because I think, Mark, we finally started to get some clarity from the largest companies in the world and how they're adjusting their strategy to fit more in line with what we're seeing happening with the economy. I think having that guidance and being able to see that strategy shift has really been helpful for investors to wrap their heads around the business.
Yeah, absolutely, Jill. And I mean, we've been harping on this with our research a lot through most of this year, right? Really, with the exception of Facebook. You can see Facebook had a drop in revenue sequentially for the first time in its history, and they're still down a little over 50% this year. But other than Facebook, you know, a lot of these other really big names, when you think about Microsoft and Alphabet, Amazon, and Apple, they are not as exposed to a single factor driving a slowdown like Facebook is, in the sense that they're kind of all in on advertising as a source of revenue. And that is very sensitive to the economy potentially slowing down a bit. What we've been harping on all year, right, is that a lot of these other companies, which collectively make up about 50% of the index, they're not seeing any signs of slowing down, either from their consumer base or their enterprise base, because their products have become so entrenched in everyday life. Whether you talk about cloud services from Microsoft and Alphabet, whether you think about you know, software from Microsoft, hardware from Apple, right? All these companies are still riding really strong long-term secular trends for growth, and it's going to take a really meaningful slowdown in the economy for them to start to see revenue declines quarter over quarter or year over year. These folks are still growing revenues double digits for the most part year over year, despite a little bit of softening, despite a little bit of slowing down in the economy. And they're quite well positioned, I think, from the perspective of, you know, meeting the inflationary pressures and passing that on to their consumers. You heard a lot about weakness in retail recently, right? Walmart, Target, some other names having some of the worst performances in their history off of recent earnings. Well, guess what? They're having to mark down a ton of their inventory because they loaded up too much over the past year or so. What's Amazon doing? They raised the price of Prime by $20 this year. And that's not really hurting them at all in terms of subscriptions and overall business on their e-commerce platform. So very unique strengths in the Nasdaq-100 with a lot of these big names, and not surprising to me to see this turnaround, as a lot of, you know, the really bad news maybe has gotten priced in, maybe overly priced in year to date.
Yeah, well, I for one certainly contribute to Amazon's bottom line nearly every day, Mark. Let's take a look at the second key factor here. Of course, what's happening in the fixed income market, particularly with the 10-year.
Yeah, so I mean, it was kind of a one-way street most of the year. You could see that rates for pretty much every maturity that we've highlighted here for the U.S. government bond complex, 2-year, 5-year, 10-year, and 30-year, they all peaked right around the same time in mid-June. And they've nicely cooled off since then. That's kind of been in line with not just the expectation for the economy to maybe slow down a little bit as the Fed wants, but also seeing maybe inflation peaking, certainly in certain areas like the energy complex has peaked and rolled over the past couple of weeks. What have you seen with that? You've seen fixed income recover a little bit. And I think it's interesting from a technical perspective, if fixed income investors are not losing money just as much as equity investors are, you might see some favorable rebalancing flows into equities off of that recovery as well. So couple technical, couple fundamental aspects, I think, coming together to kick off this second half of the year and maybe help us, turn in a decent annual performance. We'll see how this goes.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.